Hi, my name is Dave Fraser, and I'll be discussing the brief economic overview and regulatory developments. In political and foreign affairs, South Korea has just been warned of a North Korean terror threat. Now, with the U.S. ties to South Korea, the U.S. has shown involvement to hopefully curb these threats. Last week, the president made the first presidential visit to Cuba in more than 80 years. And with this, hopefully the gap between Cuba and the U.S. will be bridged. And finally, Turkey has escalated their fight with the Kurdish militants. The U.S. has been backing the Kurdish militia, and Turkey is asking the U.S. to cut our ties. Now on to economies. Japan is continuing to see these negative interest rates, and support for this attempt to stimulate the economy is very light in that country. The U.S. stocks have continued to fall as the Dow, S&P, and NASDAQ all dropped towards the end of the week. 70% of all companies making their IPO debut last year are below their initial IPO prices. In China, we are still seeing a lot of turmoil as the markets continue to operate in chaos. And finally, the U.S. interest rates have remained the same, but come March we may see a change after the next meeting. In company news, Apple has continued to resist the Fed's request to unlock their smartphones. It seems that this debate is really opening the door for some large decisions on the relationship between what the government can ask of these big tech companies. Unfortunately, due to slow U.S. sales and a strong dollar, Walmart has had to significantly cut their annual sales forecast. And finally, the SEC has settled a dispute requiring VimpelCom to pay more than $795 million to resolve an FCPA violation in which they bribed an Uzbekistan official for business. In regulatory news, U.S. regulators are putting the finishing touches on a rule that requires brokers to disclose their earnings when they sell securities. This will give investors more transparency as to what is happening on the other side of the deal. For the first time, Japan is now passing on the negative interest rates to depositors. And finally, the SEC has proposed a rule under the Dodd-Frank Act that establishes provisions to the orderly liquidation of covered brokers and dealers. To wrap up, it seems the country and the world are still in a collapsing market, although there are areas that show promise.
Hi, my name is Josiah, and I'll be talking about recent mergers and acquisitions. On Thursday the 18th, IBM announced that it would acquire Truven Health Analytics. This $2.6 billion takeover, along with IBM's $1 billion takeover of Merge Healthcare, has pushed IBM into the leading position of health data, analytics, and insight. The ADT Corporation announced that it was being acquired by private equity firm Apollo Global Management for $7 billion, a 56% premium from its stock's closing price. Apollo intends to merge ADT with its home security company Protection One in a deal valued at $15 billion. The world's largest wholesale technology products distributor, Ingram Micro, has agreed to be acquired by China's Tianjin Tianhai. Continuing the trend of Chinese companies looking to move their money out of China, Tianjin Tianhai has agreed to acquire Ingram Micro at a 39% premium, resulting in an approximate deal of $6 billion. In recent financing news, Apple is readying itself for a 9-part bond offering that includes short-term floating rate notes and fixed-rate notes varying between 2 and 30 years long. The prospectus is being underwritten by 5 investment banks and will total $12 billion in size. Advantage Oil and Gas announced on Thursday the 18th that they would be raising $87.5 million through equity financing. The sale of 11.75 million shares at $7.45 per share will be used to pay off indebtedness and partially fund their Glacier gas plant. Food services company Lexaria plans to undertake a convertible debt and equity round of financing. Lexaria intends to raise $400,000 of convertible debt, offering a 10% interest rate. The debt can be converted to shares anytime within the next 4 years for a steadily increasing price. Conversion will start at 12 cents per share and increase to 30 cents per share by 2020. The equity financing consists of 5 million shares to be sold at 8 cents each. Each share purchase comes with one non-transferable share purchase warrant, giving the holder the right to purchase one more share at 15 cents anytime in the next 18 months.
My name is Fernandes, and I'm going to be talking about the developments in the LBO and hedge fund markets. In light of the slowdown in the Chinese economic growth and the plunge in oil prices, increasing volatility created a favorable environment for LBO transactions, which we should see picking up a lot now during the year. These are a few examples that were on the previous week. And now a brief summary of global markets. China's yuan had its biggest jump against the dollar in more than a decade on last Monday, as the central bank is keeping its options open, swinging between its pledge to attach the currency's value to currencies of its major trading partners, and that when that doesn't work, repegging it to the dollar. That's an important move for the currency that's been just losing its value significantly in the past year or so. On commodities now, after experiencing record lows previous weeks, Saudi Arabia, Russia, Qatar, and Venezuela agreed to freeze oil output. Saudi Arabia and Russia, which are the world's largest crude oil exporters, announced plans on Tuesday to cap production only if major producers follow suit, making this the first coordinated move to boost prices in years. The situation is particularly complicated because Iran and Iraq, which are other large producers of oil, will also have to halt the production increase, which makes it particularly hard for Iraq, that's been just throwing productions through the roof in order to try to raise money to deal with its internal conflicts in the country. Overall, last week was a good week for the US economy. January was the slowest economic start of the year in history, and last week we saw a good increase and a good response from the economy, especially because of the increase in the oil price and the foreign economy. We can see that the Dow, after being under 15,000 for the first time in years, finished relatively strong, and the price of gold, which is usually reverse related to the economy, it was pretty flat, and the S&P also finished in a positive change last week.
My name is Tucker Moss, and I'm going to talk to you about investment banking news. Head of Barclays Bank, Tom King, steps down after clash with former CEO and major stockholder Anthony Jenkins. The feud started after review of the future of Barclays. Barclays will be putting a sharper focus on the UK and US, cutting more than 1,000 jobs and closing offices in other countries. Their efforts to narrow focus also come with cutting investment banking products and services. The Fed talks about breaking up banks in order to prevent future bailouts. Half of the banking sector's assets are held by just 4 companies, which is worrying to many. The financial sector has posed heavy lobbying and objection to such split. Despite recent chief executive pay cuts among other large investment bank firms, Citigroup has raised chief executive Michael Corbett's compensation by 27%. This pay increase includes company stock options and hopes for a more profitable and stable company. With the upcoming presidential election, Hillary Clinton is under enormous pressure to release data involving paid speeches, including those to Goldman Sachs and other investment banks. It is estimated that Goldman has paid more than $675,000 to Mrs. Clinton for these private speeches. New York Times says she is very reluctant to reveal what she privately told banks in these speeches. The public is demanding information on speech compensation as well as details of content. Goldman Sachs and Morgan Stanley both suggest a long-term stock buyback program. Both banks would like to see a 15% share buyback in the next 3 years. Their current financial stability would allow for this and help increase shareholder value. Critics are weary of low global investment bank performance this year, which could halt or alter such plans. Goldman Sachs appointed Dan Holm, global head of investor relations, as the new head of Pine Street. Pine Street is Goldman's leadership training program. Pine Street is heavily focused on training firm partners through executive coaching and classes. Holmes has been with Goldman Sachs since 2001 and has fulfilled many roles within the company. Inside executives and analysts thinks Holmes will fulfill the role competently.